Greetings, members one and all of the Salivation Nation. Here we have another opinion coming from Forbes website, which is more of a mainstream source for information. And this one is bullish on gold as well. Posted a video about this earlier, about how futures trading could mean that the prices of gold could jump. And this is from a different opinion, from a more mainstream source. So I thought we'd take a look at it and see exactly. Is there any credibility to this? No one really knows, and I think you'll see the author will agree with me on this. But he's saying that the title is a bit cheesy. Why gold is poised to pop like a jack-in-the-box. Gold traders are now extremely bearish on the price of gold bullion. It's a sign that the price of the yellow metal will likely jump. He says that investors wanting to profit from such a move might consider buying the SPDR gold shares, GLD, exchange traded fund ETF, which holds bars of solid bullion. Now we all know that the amount, I think it's probably more likely in the silver markets than the gold markets, that there's probably not enough of these of the bullion to back up the ETFs. But so it'll really never be tested if people want to cash out, so to speak. Gold prices have been walloped this year by the rising dollar. The prices of all metals tend to move inversely with the value of the greenback. 1 troy ounce of gold bullion would recently fetch $11.96, down 13% from $1,368 on January 26. So it's fallen actually even more than that. Let's take a look at the prices. It's down to $11.89 as of the recording of this video. All the metals are down a bit this morning based off of more positive economic data. And I imagine we'll probably see them go down even more with a recent trade deal that has been come to realization and signed by Canada at the witching hour, at the last minute. So imagine we'll probably see the prices for gold and silver to decline even more. But we may be holding off until we find out the details of that trade deal. More on that possibly in another video, because I think it is important that all of North America is in harmony. The trade situation with Canada was one that was quite contentious, and it sounds like they made quite a deal, but we'll talk about that maybe at another time. Professional futures market traders are currently betting heavily on a continued decline in price. The net position of such speculators could be characterized as highly unusual. The decision of so many more speculators to bet on a decline versus an increase in prices is now more than 2 standard deviations from the average, according to a recent report from the New York-based financial firm Macro Risk Advisors. That means that such positioning is highly unusual. It shouldn't be surprising that traders are betting this way, because ever since late January it has been a profitable investment decision. Nothing else. The science of investing is one of doing what works right up until it doesn't work anymore. What we also know is that when investors get either extremely bullish or extremely bearish, then the market is more likely to move in the opposite direction. In other words, the positions of the futures market speculators sometimes gets considered by a contrary indicator. Right now, the historically high short position of such traders would suggest that gold prices are about to rise. That is, they will likely move in the opposite direction of the futures market bets, because they have to make good on those short positions when buying them back, and that means an increase in demand, and hence why we could see the prices of gold and silver go up, even if we have a strong dollar. That's important. That's the thing that has to be taken. If you overshoot your short bets, short selling for the long, when you have to make do to buy it back, then that's when you could see the prices go up. It's timing is everything on this too. How long will it take for it to happen? Speaking of timing, it's hard to tell, as is how much of a move can we expect. What we do know is that changes in the value of the US dollar this year have been driving what happens in the precious metals market, that's for sure. If the greenback unexpectedly weakens, when we could expect to see a rally in gold prices, even a small move in the dollar could prompt those traders who have bet on a continued drop in gold prices to reverse their positions. They might be getting nervous. Exactly. In other words, they buy back the futures contracts that they sold short previously. This could cause a rapid and fierce rally in the gold market. The phenomenon is known as short covering, as a short covering rally. And I believe that's a very important position, and I agree with that analysis. Such a rally may or may not happen. We won't know for sure. Likewise, even if there's such a move, it isn't yet clear whether such a thing would be a temporary phenomenon or a long-lasting. In other words, could we see a dead cat bounce situation occur again? What traders should watch right now is the likely next moves of the value of the US dollar. If the greenback weakens, the gold will likely rise. I won't even say it will. I will take it even further. I think it will rise. I believe it will rise, especially considering what they're doing with the short positions. A lot of people taking advantage of that. If it strengthens, then we can expect another drop in gold prices. My takeaway from this article is that it's going to be one of those things where with the short selling and a lot of it going on with these traders, the nervous traders, psychology is going to play a huge role here. So that if we do have a very small drop in the dollar in the coming months, then we could see gold spike up and silver spike up too dramatically. In fact, silver maybe even more so. We've seen some pretty dramatic moves in silver, much more dramatic than gold in recent days. And I think some of this may have to do with it. It's the short selling. They're hedging their bets, and it's all based off of these good economic indicators with the greenback. But who knows what could happen? And maybe we'll find out that this trade deal isn't as good as everybody was hoping, and that could actually make the markets nervous. The dollar could lose a little bit of value, the dollar index, and then you'll see a chain reaction. Gold, silver pop up like a jack in the box, pop out like a jack in the box, using their analogy here. So it's interesting to see right now the prices, considering this agreement announcement of the trade situation, is the gold's, it hasn't dropped a whole lot more. It didn't have the biggest move. Palladium actually took the biggest hit today. It's down $24. Platinum actually went up a little bit. And so, nonetheless, it's going to be interesting to see how things play out. But I believe that whatever happens in the markets is going to be based off of a more likely psychological scenario rather than a normal economic factors and conditions with the movement of prices. But, again, as the author of this article said, that the timing, we don't know when it's going to happen, and how much of a move that can be expected. It just depends on the psychology. But understanding psychology and understanding how the markets operate, and even how the what happened in 2008 and then 2007 with the financial collapse, things can happen very quickly and very dramatically. And considering the debt our nation holds, and what's going on in the housing market, a lot of what's going on in the housing market still really hasn't been fixed. And so something like this could cause some issues and some problems to occur. And if there's a domino effect type deal, then I think we could see, especially with the short selling and people panicking to buy back before the price goes up too much, then that's just going to perpetuate the prices going up for gold and silver, especially silver. We may see more dramatic rise in silver than gold if this scenario plays out as is predicted here. Nonetheless, it is what it is. It will be what it will be. And as most of us always say, we hedge our bets with stacking the physical gold and silver. I was fortunate enough to make a purchase today, and the prices actually went down for once, a little bit, not a whole lot, but enough that it made it worth save a couple bucks. I actually bought a capsule for this coin that I would have gotten free if I would have made the purchase yesterday. I would have gotten a free capsule. I could have gotten a couple of free capsules. So there you go. Post your thoughts below. I'd like to extend the multitude of gratitude to you all for watching and encourage you to please rate, comment, and subscribe.